Hello everyone. Good afternoon and welcome to the PivotBoss Premium Trading Room. Today is November 1st, 2017. Welcome to the first trading day of November. Good to see you all. Good to see you, Brian, Mike, Max, Scott, Rich, everybody that's in here, Vic. Good to see you all today. And we got our first monthly market outlook here going on and some movement after hours. We got a little Facebook news, Tesla, and others here. And we got a lot to talk about here, especially with the FOMC day, the Fed interest rate decision. Mostly it's all about the FOMC key levels, which you'll note are right here on the charts. But that's a good little day there whenever you get a nice data point like that, because now we can use that data point in the next several days, in the next several weeks, and even months and months into the future. So this is going to be a good data point. We'll talk about it here a little bit more. First of all, if you are new to PivotBoss here, you can always go to pivotboss.com and check out a little bit more about what we do here. Learn more about me. You can learn more about my book, Secrets of a Pivot Boss. If you scroll down a little bit from the main header here, you can click on my trader profile and learn a little bit more about me and what I've done, some of my experience, some of my market specialties, which include a lot of profile analysis, volume profiling, pivot-based analysis, auction market theory, order flow analysis, lots of different market specialties here that we all blend together to kind of give us a good picture of when a market is ready to move. And we're going to be talking about some of that here today. So you can go through here and kind of check out more about the book. It's a great book that a lot of folks give me great feedback off of. Wrote the book back in 2009, published in 2010. So it's been 7 years published here. Just had its 7-year anniversary last month. Well, now 2 months ago in September. And great feedback, and still a book that lots of folks and traders from around the world talk about. I'm always so happy and humbled anytime folks send me an email or a note talking about how the book has changed their view on the market and helped them really engage the market from a much better perspective. So if you haven't checked it out yet, please do. Secrets of a Pivot Boss. You can learn more about our premium trading room as well. You can even click here and kind of see a typical day in the trading room. Our master's program has a lot of great training as well. You can read about testimonials and lots more here at the site. So check it out if you haven't already. Let's go ahead and jump into the charts right now. Usually what I do here is I talk some futures first, and what I do is I used this, I usually use the first trading day of the month to kind of talk a little bit longer term, not just what's going to happen from a day trading perspective or a swing, but just looking out into the rest of the month, looking out perhaps even months out based on higher time frame charts. And then that gives us an ability to kind of zero in on some of these important levels where we can do business. And so we're going to talk a little bit here about futures. We'll jump onto some stocks as well. If you have anything you want me to check out, please let me know. Type it into the chat. We'll look at Facebook, for example. We'll look at Tesla. We'll look at Apple's coming up with earnings tomorrow. That's going to be important. And so, or any other futures contract or whatever you want me to look at, we'll talk shop on that. So right now, I'll go ahead and start off with the NQ. The NQ has been something where we knew a big dose of volatility was coming. And this is something we talked about in our trading room a couple of weeks back. I've written several indicators like this PivotBoss oscillator, like this PivotBoss advanced ADR indicator, like these PivotBoss pivots, also these ADR targets. And all of these tools really, all they do is help us quantify. They help us quantify what's going on in the chart. So it's really objective. We just look at the data, and the data helps us. It gives us basically an idea of when to expect what. When are we going to see likely compression? When are we going to see expansion? Which targets are most likely to be hit based off of recent trading behavior? And recently here in the NQ, we got very tightly coiled in the charts here, around basically right back in here, where we had ebbed and flowed, high volume or high volatility, low volatility, high volatility, low volatility, higher volatility, then really, really low right here. And when we got to that point, I mentioned now is about the time here where over the next 2 to 3 weeks, we're going to see a big increase of volatility. And that's where it's going to be much better to engage on the intraday basis. It's going to be much better to engage on a swing basis. And one thing we talked about with the NQ was this 6,000 level and into 6020. 6020 basically being a key level from the previous month's highs. Price broke through that zone and took off. And so what we kept talking about in the trading room is as soon as price comes back to test that zone, that 6020 to 6,000 zone, if we see what we want to see there in terms of rejection, we're likely going to see about a 250 to 265 point rally into this target right here, and that is 62.64 half. We got that. We finally hit it today on the first trading day of November. Now that 62.64 half is a target that comes from this impulse range back here. You can see price sold off heavily, found that low, rallied heavily until it found that high, and then pulled back to the midpoint of that range. And once that happens, you have very, very clear levels now that the market's going to use to trade off of. It basically, that's an impulse move that sets the range. And anytime you're trading outside of this range, the expectation is that you'll likely go to the expansion targets. These targets are based off of this impulse range. It's basically a 100% extension of this back end of this range. And so we finally got it. But we got it, by being patient. We knew that this day was big when it broke through and rallied through those highs. And we knew that as soon as price were to pull back, that would offer the optimum opportunity to swing this thing into 62.64 half. So there was a lot of waiting in here because, quite frankly, back here was very, very poor trading behavior. We've seen lots of poor trading behavior here recently, even coming out of the summer, where the ranges were so poor. As a matter of fact, back here, the one-day average daily range was about 38 points per day or so. If I double-click this indicator and drop it down from a 5-day range average down to a 1-day average, you can see right here, basically, the indicator shows a gray line and a gold line. That gray line is 10-day average range. And back over here, that average range was as low as 34 points right before we got the major expansion. So on that last day right there, we had 34.72 points as the average 10-day range. And for those of you that follow the NQ, you know that that is extremely narrow. There's not great market facilitation that goes on when you're trading in a 30-point range on a 6,000 point index. So we knew an increase of volatility was coming. We knew that if that volatility were to start to the downside, it would offer a great buying opportunity on the way up. And you can see, look at the difference here of the size of these bars, right? The range from high to low, the range, how tiny it is. And then now look at the range back here, completely doubles. Look at the range here, just so much bigger. That's the volatility that we're talking about. And again, we were able to anticipate that with our tools and know when to strike. So this was fantastic with the way it played out. But now we're looking, right? We saw a major pivot low. We've rallied, and perhaps we put in a major pivot high today. This is something we've been talking about in terms of, is the NQ topping out? Is it finding a short-term pivot high? And I mentioned short-term, and I have to say it because if I say this thing is pulling back, it's only a short-term pullback. The overall trend is still up. The framework is still quite bullish. So anytime you're looking to counter-trend fade this thing in a very strong market, you have to be careful. You have to do it in a disciplined approach. So if I say here to our group that I think this thing might sell off, we're looking for high probability targets. We're looking for a zone where we feel like there's high odds that we're going to reach those targets. We're not going to try and oversell it or overextend it. We're going to look for high quality targets, get in, get out, and then we're going to look for the next primary move, perhaps to the upside, unless market structure breaks down. So right now, this is very, very bullish overall. If you look at this thing starting back from the beginning of the year, really, look at this. From the beginning of the year, that's the first trading day of January right there. It's been straight up, then it went sideways and built some energy, and now it's seeing more expansion. So we might not be done going up on the whole, but we may be seeing a short-term pivot high at the moment. But even then, with Apple earnings on deck tomorrow, this thing could continue to push higher. So what we're looking for right now is I'm looking for signs that this top is going to hold. I mentioned to the group today in our trading room that prices above this high, that white line right there is the previous month's high. This white line is the previous month's low. So the October low is there, which was basically the first trading day of the month. And the October high is there, which is the last trading day of the month. And here's the close, that white dotted line. So if you're looking for a short-term rotation, if you're looking for rejection, a lot of things came into view right at this level because price pushed above the previous month's high and could not stay above that zone. Instead, price fell and then pushed lower throughout most of the day. So right there is already a signal that this is rejecting prices above the previous month's high. If you're also going to reject the prices above the previous month's high and the previous month's close, then usually what you see is a return back toward the midpoint of the previous month's range, and that is this magenta line, which is basically the bottom of the pivot range in an uptrending market. So right here, it's about 61.10 basically. That's where we're at. So if we did pull back, we're looking for some sort of pullback into about 61.30, 61.50, and as low as 61.10, right? So I'm not trying to say we're going to do that type of thing. It's just a short-term rotation. So one thing that we do is we use our tools to help us zero in on where that target could be. So from that high, which is the dotted line, by the end of the week, we could be at this red line. If this is a sell-off, right? If this is rejection, because that red line right there is average weekly range. From that high to this low over the last 10 weeks, that's been average range. This line is 75% of average, and that gives us great odds to be reached as well. So by the end of the week, we could be somewhere here. If I were to change that to a monthly look, so I can double click right here and change it from weekly targets, and I can make it a monthly target just with one click here. And now from that high projecting downward, this would be your average range over the last month. So by the end of November, we could be at 60.18 if it wanted to sell off and not break a sweat, because that's average. That's par for the course for this index. This one right here, kind of hidden behind the yellow line, that's 60.85. That is 75% ADR. So that's a high probability target. This one is not as high odds because markets don't move in perfect averages. But this zone becomes a high probability zone. So again, just quantifying based on the data here, we can see where these targets are for the next week and for the next month if this thing were to pull back. Now, one thing I am watching very, very closely, 2-day lows, and I'm also watching basically this high right there into the close. With Apple earnings coming up, with Facebook being pretty strong here, what could happen is price could come up here and continue to test in this area, but we could see absorption. And if there's absorption that starts to come in and price really can't push through 62.64 again or 62.60, that absorption there could then lead to a stop run of 2-day lows, and that could fuel this move back towards 61.50, for example, or 61.30 even. So those are some of the things I'm looking for. I don't know if this is the top just yet, but it has some of the qualities that we look for in our room. And again, it's hard to tell with earnings what can happen. But if we drop this down, let's go down to our intraday time frame here. So I go back down to PivotBoss Intraday, and now you have your intraday time frame. This is a 5-12 tick chart. So basically, here's your pivot high. The 62.64 half is here. That's your previous month's high right there. And you're already seeing signs of absorption in here where every time it rotates, it's being pushed down, pushed down, pushed down. That tells you that there are bears trying to keep these late bulls trapped. And if they're successful, that's when you're going to see perhaps a stop run to the downside. So that's what I'm looking for tomorrow. I still think we can pop up. And if we do, we got to see the market reject 62.60, 62.65, you know, that zone. And if that's the case, then you could start to watch for signs, you know, bigger signs of absorption. Watch for that, you know, a trade location that gives you minimal adverse excursion and those types of things. So that's what I'm still looking for here. But of the last few days, this is about as good a top as we've seen, and a reversal, a great rejection. I just want to see how does the market respond tomorrow morning to these prices here. If these prices are rejected, that could then begin to shift the tide short term to the downside. But again, this market has been very, very bullish. And so anytime you're counter trend fading, you know, you have to be very cautious and careful. It's not like buying the dip in an uptrend, right? So usually you have to balance. And here I was gung-ho, you know, pounding the table about if we get here, buy it, buy it, buy it, buy it, buy it. But whenever it's a counter trend fade, you have to be a little bit more disciplined in your approach, because obviously the overall trend is still going up. If this thing fails, it's still going higher, right? So the overall trend remains up. There's a couple things I'll be looking for here tomorrow morning. And again, Apple after the hours tomorrow, I believe, is going to be big. So what we could see tomorrow more than anything is perhaps even digestion up here. That kind of brings folks into the market, and then we'll likely see those stops become fuel. So that's one thing here to look for on the NQ. I wanted to talk a little bit about FOMC key levels as well. I sent out a tweet earlier with the FOMC key levels, just so you have it and can mark it. Basically, for those of you unaware here, an FOMC key level is basically the 1 o'clock open price on Fed Day. 1 o'clock Central, 2 o'clock Eastern. So it's that 1 o'clock open price right when the announcement is made, the statement is released. So the Fed FOMC statement is released, the Fed interest rate decision is released. That 1 o'clock open price, what is it? And you can use it in any of these markets, any of the futures markets that you want, whether it's the NQ, crude oil, ES, YM, gold, 6E, 6B, silver, it doesn't matter. They all respond really, really well to these levels. It's just a very important data point. And basically, my experience goes way back to data mining, pivots, and key levels, and just very important levels in the market, and seeing how the market responds to levels. And sometimes it's the easiest key levels. It's not something that's hidden, that's very mysterious. Oftentimes it's right there in plain sight. And a 1 o'clock open price is in plain sight on Fed Day, and it's such a strong level to watch. I mean, just look back here. This right here is the July 26th FOMC key level, and that one is the June 14th key level. Look how the market reacts to that level, to this level, right? It's just impressive how the market will use it as a target, use it as an entry, and it happens time and time again. So what I usually say to our group is, with these FOMC key levels, watch the first move away from that level. Because if the first move is down, for example, it'll go down until it sees rejection. And once it sees rejection, it usually comes back to the level to retest it. So that's a fade op right there. The next thing it does is, if it goes offered first, usually the retest is also offered. Not always, until there's rejection, and then it'll come back. Sometimes what happens is this thing may go offered first and then come back and go bid through it, and then the retest is defended and it goes off. So it can be used in many different ways, but again, each time is a little different, but it's just an important data point. We use them as targets all the time, and can even be used as entries as well. So again, if you go back in history, you can see I have a lot of these blue lines on. Basically, I usually keep them on for a year or so. Sometimes I take off some of the last ones. Like, for example, I don't really need these from last year because we're not close to trading those prices. So why have them? So I only put on since May because those are the most relevant prices right now. But these prices remain relevant not only days out, but they remain relevant weeks and months and even years later at times if the market's trading around those levels, right? Right now we're taking off. So last year's don't mean as much right now because we're in a steady price discovery phase to the upside. But today, 62.38 is the key level here for the NQ. I wanted to talk a little bit about CL as well. The CL FOMC key level is 53.98. 53.98. This one has been phenomenal in its key levels as well. You can kind of see back in history here. For example, here's one from, that's, if you can't really see it here, but January 31st. It goes offered away from the level, rejects down here and comes right back to it, and then rejects away from it yet again, right? It just shows the power of that level. We just came right back to it here recently. These types of levels are very, very important. You can see there's another one here. Now price will rally, hit that one, then come back and hit that one, right? So they're great, great targets. You can even initiate trades as entries off those levels. With crude oil on a longer term basis right now, we are at a significant point in the chart. And I know many of you are from our trading room here. You hear these types of things all the time. Some of you are newer or have never been in our room before, so I'll kind of cover some of this some more. But this 55 level here has been significant. Super, super significant in the past. I mentioned before that prices are just, crude is allergic to prices above 55s, at least over the last couple of years. We've had a range basically from 40 to 55, and that's been the range. That's been the range we've stuck in. There's also been a price distribution below it from 26 to 40, and there's been a price distribution above that range from 55 to 62. So these are three different price distributions. Right now we are at the edge at 55. It's also a significant LVN in the composite profile. So right there on that 55, significant LVN. That's a low volume node. That tells you that there's low volume traded in that area, and it's usually a sign of rejection. So, you know, the old adage here is basically when you bounce a rubber ball on concrete, you'll see a big bounce. LVNs are like concrete. You see a great bounce. When you bounce a rubber ball in mud, you don't get quite a bounce. It gets stuck. And HVNs, or composite volume points of control, those are like mud. You bounce a ball into it and it just gets stuck there, right? And the reason is because nobody wants to trade it here and it gets rejected. Everybody wants to trade it here because that's where value is. That's where the most volume is traded. And so everybody wants to trade that price. So ideally at these edges, you're looking for rejection. You're looking for rejection. We didn't start to really see rejection until about here. And up until that point, I was actually bullish. I thought we might actually have enough juice to break until we started seeing rejection tail. And then another rejection tail. And then a failed new high. And then we say, you know what? This is coming back down toward the opposite low. And then you had the huge break day, right? That's how strong this 55 level is. It's a significant level. So basically the day before yesterday, or a couple of days ago, I said, hey, I think there's one more shot. I just don't think we get this close to 55 and not hit it. It just doesn't happen usually. You got to get up there and test that 55. And it did. It tested prices as high as 55.22. There's the previous month's high right there. Here's the previous month's close. And look at today's bar. It looks like rejection. It's not a super strong rejection because it failed to hold below the previous session's low and bounced. But it's showing initial signs that there is some rejection up there. So I'm not ready to just say, hey, this thing is going to drop just yet. But it's doing its thing. And it could still come up there and test again, right? So this isn't a picture-perfect rejection just yet. Sometimes it takes a few days to get folks too long, and then the stops come out. And again, This has been a bullish market, so even if we do get a pullback, bulls may try to come in and see if they can really push this thing through 55s. Because again, if this market can establish above 55 on a longer term basis, we could see a move that takes us into 60 to 62, right? That's kind of these recent highs right there. That's 62. You would come back to this HVN at 60 and then perhaps even test the opposite side of the LVN, and then you would establish a range between 55 and 62. That's the longer term look here. If this market establishes above 55, you got a great shot to try and work your way back into 60 to 62, but you may see some sort of price distribution develop above that range. I'm not sure the market's ready to do that, but it doesn't matter what I think. It matters what the market does. And so that's why we got to continue to read the cues here. And at the moment, we're seeing initial signs of rejection at the CLVN at 55, our key level, and above the previous month's high. And that initially should at least spark some sort of pullback. And that could be as shallow as 52.95. It could be as deep as 50.90 or even 49.26, which is value. So ideally, what happens in any market is once you establish a range, you establish balance, right? Look at this right here, big HVN, CLVN here, value toward the middle of that HVN. Ideally, you're taking price from rejection and returning it to acceptance. So in this case right here, we've been bullish ever since these lows because we got outside of our key range low. So right here is a great retest entry that got us back to the mid. A lot of chop here, so we were kind of hesitant in here with the chop, but overall we saw a developing channel. The trend was bullish, and so here we were looking for a buy opportunity that took us to 54 to 55 because that's just par for the course. You're uptrending, you're pushing higher within this channel toward the upper edge, and now you're at a cycle high. It may take a few days up here, but perhaps we start to make our way back toward a cycle low. And again, look at this FOMC level. So now you're starting to see a little bit of a pattern here where if we see rejection where we thought, and we're starting to see that initial rejection, but it doesn't mean it's sell time just yet, we could go from this FOMC key level of 53.98 and we could see at least a high probability return to 50.90, which is the FOMC key level from September 20th. So look how the price traded on this one here recently. Went offered through it. The retest was offered until it rejected here and it came back to it. Kind of little hustle and bustle here, went above it, came back, the retest was defended, and then boom, just shot up, right? So if we reject up here, I think there's high odds we get back to 50.90 because that is an important key level here. It would also be within the framework of this uptrending channel, right? So that's something to watch out for here in crude. We have clear rejection at 55s. That's beginning to develop, but we might see another day or two, maybe even three. It could spend a week up here, kind of building out before we see stops get run below recent lows, and it's likely going to run stops below 53.98, 53.90, right? I mean, that's going to be about what happens, and then you could see that move. Now let's quantify this thing. So if I double click here again and take it from a weekly to a monthly target, look at this right here. From that high, using average monthly range over the first 10 months of this year, this would be your average range target. That red line right there, which is 49.19. That means from that pivot high, if that remains the high of the month, on average, over the last 10 months, crude oil can go here and not break a sweat. As I always mention in our room, I don't always play to the average. I played it at 75%. That has the highest odds of being reached while also maximizing the move. And so that is 50.69. which coincides pretty closely with 5090. So that tells you got great odds of reaching this target by the end of this month. So that quantifies what we're looking for here. So I don't, I'm not using I think or maybes. This is just based on recent history and the data, and it says this is a good spot right here to target over the course of the month. Now, we do have to keep in mind that later on this month we have the Thanksgiving holiday here in the U.S. You take a day off for that, plus a half day, plus volatility drops off in general. So we're going to have a little bit less trading days here this month with a little bit less volatility perhaps. So I may not be shooting way out here. We just have to play it by ear. And so what I mentioned to our group is first things first, if we were to reject here, a retest of 52.95 is a big likelihood. And then from there, if it breaks down that market structure from there, we got great odds at continuing this thing. So if we see rejection up here that we want to see over the next couple of days, I think there's great odds to get 52.95 with a shot at returning back toward 50.90. But again, over the long term, this has been the trading range, 55, call it 42. And if you're up here, that is your main target, 49.26, its value. And there's still a shot to rotate back down here because that's what the market does. It rotates back and forth when it finds a range where it can do business. And so this, over the long term, still has a shot to come all the way back toward 43.76 into the lower part of this range. And if it did, again, it would offer another opportunity to buy it and bring it back up the price ladder back toward 49.26. So we're right at the edge. We'll see how this continues to develop. But 55s have been fantastic. The recent rejection here had us pointing to 48.91. VPOC shifted up to 49.26. And from there, we were looking for this thing to rally toward 54.55. We got that. And now we'll see if we get that counter wave. And if we do, again, I think there's high odds we can retest 50.90 at the very least over the next month. So something to look out for here in crude oil. But again, those FOMC key levels, very, very powerful levels. You just see how they bounce off those levels, return back to them as targets and all kinds of things. So right now, our newest one, 53.98. Let's talk a little ES here. ES has been trending straight up, big time. The recent buy opportunity had us taking out this pivot low right there, which is basically, I believe, 25.42s or so. So I mentioned if we can take that low out, it is a screaming buy back to highs. And we did. Not only that, but it was inside our PIMA trigger zone. And the PIMA trigger zone is the space here between the first two moving averages. So these moving averages, these are pivot-based EMAs. Pivot-based exponential moving averages. And as my normal moving averages, I like to use a 21 period here, a 34 period here, and a 55 period here. That's my normal approach. And so anytime price gets into that zone, it's an opportunity to look for a buy back to new highs in an uptrending market. That's where you buy the dip, right? You buy the dip in an uptrending market. This helps you identify where that dip could come. Now, if a market is extremely bullish and has a higher intensity, I can adjust these moving averages. I usually don't have to, but if I do, perhaps you go somewhere like 13.21.34 or maybe as low as 8.13.21. And you'll notice that I use fib numbers for my moving averages. So it keeps it kind of routine for me. It's expected. I have something I use every time and I don't change it most often. So right here, great opportunity, but look what we have here. A little bit of an initial rejection above the previous month's high. That's very important. So what I mentioned to our group in the room is we could be developing an expanding range up here as this thing starts to trade sideways for the most part. One thing we looked at here is when this thing ran off, it went from 2,500 very quickly into 25.85. It's a big, quick move. And what it did was it left behind a very thin profile all the way up like this. And everything had an HVN down here that was very big and protruding off the profile. So whenever you see an imbalance phase like this, I call it the I-shaped profile. It looks like an eye, right? It looks like a little eye. Usually what I mention to our group is as soon as you see rejection, you're likely going to see some back and forth trading in order to build some volume there and start to build an HVN. And it's also going to leave behind an LVN as well. And so typically what happens after you have an uptrending market is you see this thing wiggle down and take out some stops. Then it comes up and takes out some stops, and it comes out and takes out some stops, and it goes up, and it comes back, and it goes up, and it comes back, and so forth until you have a great mature range. And now we're going to see compression lead to expansion, either up or down, doesn't matter. So right now, again, based off of recent behavior here, this rejection could be the beginning of what brings this thing back to these recent lows to take out those lows. And if it does, it could be another great buy right back up to take out that high. At some point, I believe we're going to form an impulse move that's going to give us a great key range to work off of, something like this. Right now it's kind of back and forth, but there's a high and then it drops until it gets a hard low and bounces back to the mid, and now you have yourself a great key range. Now you can look for failed range expansion here and here. Those are buying opportunities. When you see expansion here, this is a retest opportunity here. And so that I'm hopeful that we're going to see that. Perhaps this is a pivot high that will give it to us. And if so, maybe this sell into this low might give us another pivot low, bounce back to the mid, and now we have ourselves a key range where we can do some business. So that's kind of the look here for the ES. We kind of used up this key range here and reached and fulfilled the target. And so I'm looking for something newer here, and hopefully we get that pretty soon. But again, very similar to the NQ, this thing is going up. And so any pullback, even if it's as deep as 25.17 here, that's going to be a fantastic buy for another round higher. So I'm still in the buy the dips camp, but we could see some short-term rotations lower in the meantime as well. So that's a little bit here with the ES. Let's take a look here at Facebook for a moment. Facebook released earnings earlier. It looks like they had a big beat. Actual is 159 versus 137 estimate, so that's a pretty good beat there. For Facebook here, it's been very bullish. I mean, it's had a very strong market overall. You can see the trend that's been playing out here over the year. One thing that we've had was a buy here. And what we mentioned was this is a great little range. And if price were to take out these lows, it could offer an opportunity to buy it not only back to this recent high, but perhaps even spark expansion through it. And so when this day was happening in our trading room, I mentioned to our group that it's not the time to buy on this day because you got to let it run the stops first. You got to let it find that low. It's this day where the digestion occurs, the absorption, and that's really the day right here where you can get a pretty favorable entry. You can also find an entry all the way up this ladder depending upon how you enter the market, like failed new lows and those types of things. But we had it long on this period here, and what we were looking for was first a rotation back to 174 to 175. But then we had a longer term idea as well. So if you bring this out to, say, a weekly chart, look at the weekly chart. Look at this trend and how strong it was. Look at these moving averages here, right? Stacked and sloped. This was that day we were talking about. That's the weekly bar that week. And it drops right into or just above that trigger zone. Again, a great buy opportunity, right? So I mentioned that that's a great rejection tail in an uptrending market. We might see a week or two of absorption, but 4 to 6 weeks out, we're likely going to be up here toward 184, 86, and going toward 190. And you can see 1, 2, 3, 4, 5 weeks later, very, very strong trending market still in effect, and we have much more upside that could be seen. So great trending structure in Facebook. Nothing's really changed it here. They've been getting hit pretty hard in terms of the Russia thing, but it really didn't hurt the bottom line or top line. They beat on both bottom and top. But we'll see how it continues to play out. But overall, nothing's really broken this trend. So if you look, let's call it the hourly bar here, you can see this thing spiked as high as 188 today in after hours trading and is back to 183. So did we just find a short-term top? Perhaps, but the thing is still trending up. So basically, here's 188 right there. We hit that in after hours today. Again, just a strong market. And now we're back to about 83s here. So could see a tail develop. We'll see what happens. But overall, this has been very bullish. Again, I try to simplify everything as well. And again, if you're newer to the room and what we do, we try to keep it as simple as possible. And one of the things I love is just looking for a directional market. This thing has been trending up, and then looking for failed new lows. That's it. That's all. That's basically the gist of what I do. Obviously, we mix in a lot of things as well, but for the most part, we were just looking for these lows to be taken out. Take those lows out, and then you're likely going to get a lot of folks late short. Others are going to find better buying opportunities, and you're going to see absorption, and that's going to return you back toward highs. That's the gist, right? And so this is fantastic how this thing is played out. This is a good question here by Scott. When stocks spike like Facebook to 188, the stocks usually mark a top in the after hours, or is it normally during normal trading hours in your experience? That's a very good question. Sometimes a top like that, the way it rejected very quickly, those types of things do tend to happen after hours, as we know. And because of that rejection that was so hard, it might stick. That's why I say I think it might stick here. So a lot of times that type of top, it can do two things. It can either be a very big sticking point, and that's the high here for at least the short term. But sometimes it can also be a retest of that pivot as well. So that pivot being the pivot high. So at some point here, after a pullback, it might return to that high to retest. So, stocks, it can be different in many different cases. Oftentimes that's a big top right there. I mean, it's a big spike high. It's 188. We were talking about this thing likely getting toward mid 180s to about 190, and that's a strong rejection there off of those highs. So I'm going to be interested to see how it does as well. I think what happens usually, you got to go based off market structure a lot of times, and we've been in an uptrending structure here, and by posting that 188, perhaps we just found the top of the next market structure. Price distribution. So basically, from here being a range, we just got up to 188, and now this 177 is important. So maybe it comes back to here, and now you create market structure completely above 177s, right? So that's something that can happen as well. Maybe that's an impulse high that sets the range, and now we could see some business take place completely above this market structure. But breaking back below that market structure would be significant, and you would come back and retest this low based on market structure. So I think right now things are still bullish for Facebook until proven otherwise, but it's going to be interesting here to see if this thing can stay above 177s. That's a very good question. Here, would an FOMC key level be useful in a big name stock like Facebook or Apple? And I believe so, and I think we've tested this out in the room before. Dwayne's in the room here. He's really good about FOMC key levels. If I'm not mistaken, Dwayne, I think you tried it on Apple before or Amazon. But I have done those on some of the bigger stocks. Something like Amazon, for example, is it's like an index on itself. So those types of stocks I do believe have merit. But again, it just goes back to checking it out. Going back at the last two, this was 11.1. The last one before that was 9.20. So you could go back into some of those like an Amazon or like an Apple and see how it played off those levels. But I would tend to say yes for some of these bigger ones. But again, I haven't really done any analysis based off of stock moving off the FOMC key levels. But I think we've, in terms of quantifying the data, but I think we have looked at it before. But yeah, that's a really great question. Thanks for that as well. Here's Apple, by the way. Obviously, we have after hours earnings tomorrow. Big continuation to the upside. This thing has popped recently based off of the idea that iPhone X is selling more than they expected, or at least doing well. But up until that point, it had been kind of rangy, range bound. I think right now it's kind of it built some great energy in here, and it's releasing it to the upside. So this one's going to be interesting. I took off our key range here. We had a key range from here to here, and we've reached those targets. I think the recent swing high or swing low here might provide a key range. Perhaps this one is a good key range to work off of. But this one's going to be interesting again to see what the earnings say. I think 164.5 is going to be very important. Any failure to hold that level could easily rotate back toward 155, perhaps to 150. Tech has been very, very strong though, so any rotation has been bought. Absolutely, absolutely. Good question here. Have you ever used hourly pivots in your trading? Very, very good question. Yes, I have. That's what I love about Thinkorswim, actually. You can actually aggregate the data here so that you do show pivots based on different periodicities. So let's share this really quickly here. So for example, here's my PivotBoss pivots. The aggregation period here, right now it's set to monthly. You can drop down and say, hey, I want 4 days, 3 days, 2 days, daily. You can use hourly pivots, right? 4-hour pivots. And so hourly, 4-hour, those two are really good periodicities for kind of intra-period pivots or intraday type of pivots. And absolutely, I've done data mining on those, and it's just been incredible. I mean, when you bring them up on the chart, it's clear. It's clear as day. They really do work. Now, I would say that not every market is a great market to trade off of pivots. You got to be in the right structure, and that's why we're usually looking at things when it's the right structure, whether it's an uptrending market structure, perhaps a downtrending market structure. If it's creating balance in a range, then you're looking to fade the edges. So there's certain market structures that we look to engage with the pivots, but absolutely the hourly pivots do have merit. And again, you can just plot them here, apply it, and then I can drop down. Let's share this chart now, and let's do something like the NQ, for example. I can drop down right here into, say, a 512 tick chart. And did I do something else here? I think I took something off. Let's go over here. Let's go intraday. And then here, I'm going to go with hourly. And I do like the hourly. Oh, you know what? It doesn't do it on a tick-based chart. You got to do it like, say, 5 minute. Oh, it's not doing it right now. I need to check out what's going on with that. All right, I'll take a look at that. But yeah, those every time they there they go. There they go. They're over here. Let me show all. So basically, if you haven't seen hourly pivots before, it uses the previous hour's information, high-low close, in order to create pivots for the hour. And again, it all depends on the right time to trade and the right market structure and that type of thing. But when you do that, yeah, it doesn't work on a tick chart. Okay. But when you do that, it's uncanny how they work. For example, this is an inside value pivot range here for an hour, where this pivot range is inside this one. It's also narrow. And what that does is that suggests that you're likely going to see an increase in volatility and likely expansion. And look at the breakout we see, right? Not only that, price drops until it gets to the 100% expansion based off the previous hour's range, drops below it, tries to make it resistance, rejects here, and pops back above that level. That's incredibly clear sometimes, what's going on in the right circumstances again. So absolutely, these types of pivots do work. I haven't used them in a while. We got enough to work on, and usually I'm working on swing ideas instead of intraday analysis here, or intraday trading off these pivots lately. But great question there. And 60 minutes hourly in general is a good periodicity as well. Lots of institutions and that they use those pivots a lot. Not just pivots, sorry, the periodicity, and it's something you see often. Let's take a look at the GC here. Good to see you, Rich. GC is at a spot here where I'm kind of holding off at the moment, because we talk about value being kind of like bouncing a rubber ball into mud. Look how it's gotten stuck around that level. And then out here at the edges, right? That's like bouncing a ball on concrete. You're going to get those moves. But right now we're stuck. So the bigger picture right now is I'm kind of holding off on gold unless we see certain little things. Like last week I said, hey, it's a good sell opportunity for 2 days. But that was it. But I'll be honest, gold has been our best futures contract in terms of its market structure, in terms of its movement, the way that it behaves at the edges. It has been phenomenal. I mean, look at this range from here to here. I mean, we had every one of these marked as an opportunity to fade back and forth, back and forth. And it has played phenomenally off of these FOMC key levels as well. And time and time again. So today's FOMC key level comes in, let's see, is that 1276.90. 1276.90 is today's FOMC key level. And it comes very close to the FOMC key level from June, which was 1277.40. So there's only a 5-tick difference between those two. The last time it tested one was here. That's the FOMC key level from last November. So that was a year ago, basically. Look how it kind of rallied right to it, rejected, came back to this one. This is the September key level right there. It goes offered. Here it rejects and goes right back to it and hit it and went past it by 1 tick and then sold off into this one. We had that one marked here. We had it ready to go in the trading room, and we're talking about those moves as well. So this one has played phenomenally. I am a huge fan of gold and the way it's behaved. For the last 2+ years, since this rounded bottom, it has played almost flawlessly off of our analysis, and doesn't mean we always know exactly what's happening. It just means when it's doing certain things, we have high odds of a great move to high quality targets, and that's what I've loved. Having said that, right now we're chopping around value. We're kind of stuck in here, and I think we could continue to be stuck and chop a little bit longer. But at some point, we're going to make a move, either down back toward 1200 or up toward 1360. We're going to make a move at some point. And once that move starts, you can start to engage that market, watching failed new lows, for example, in an uptrending market, watching failed new highs in a downtrending market, right? Those types of things. And then once we get to an edge, Once we get down here, it's going to be a high probability fade back to value. Or maybe we get up here and it's going to be a high probability fade back to value. But up until then, I think you got to be a little cautious here because it can tend to chop back and forth, back and forth. And so I think we're getting close to a move. And right now, you're seeing failed new high here, failed new high there. You're seeing a failed new high today. Those types of things usually imply additional weakness to come. But again, you got to just be a little bit more careful. You know, if you look at this thing over the last 5 or 7 days, it really hasn't gotten outside of this range. So I think that tells us that we could see some expansion coming. But I'm always cautious when we're right here around that composite value because there's a tendency to chop. And so I'm a little cautious in this zone right now, but I think we're going to see a big move coming. And this one has been very refreshing. I mean, it has moved fantastically. I mean, I can't name anything else that looks as good or has traded as well as this one has. And it moves some points. I mean, this is a 1200 move to 1360. I mean, that's incredible. When we had it long, though, we had it long on this day on a failed new low and in a market structure breakdown. We only had it basically back to 1300. And then we were looking to engage short here. There was lots of absorption. And then there was a failed new low below 85s. And on that failed new low, we got long again back to 1330 as a high quality target. And it just continued higher to it rejected. So the ability to kind of adapt and change the plan based off what the market's doing is very, very important. So right now I think there's a lot of chop. Dwayne is mentioning right now that we have some very tight pivots on the weekly GC. So that could, again, suggest that we have some sort of volatility likely coming. So if you look at, oops, wrong button here. Let's double click this one. Let's drop the weekly on there. And here we go. So look at that. Wow. Yeah. And look at this right here for the forecasting upcoming as well. So very, very tightly coiled pivots here. And that, again, that could suggest some expansions coming. So I don't have anything where I can say it's time to buy or sell at the moment. But the cues right now with the failed new highs suggest that this thing still wants to trend a little bit lower. At some point, if we can get away from this value, I think we have a great shot to test an edge, and then it could be a great rebound back to value. Yeah, that's a good one right there. We talked a little bit about RTY. This is the new Russell 2000 for CME, so it's got the just started trading here back in July. Got a lot of great movement. It got very, very vertical. And again, what we talked about in our room is once it got vertical in this point here, this became an I-shaped profile right there. And I mentioned that, you know, we're likely going to see a fade back, perhaps as low as 1460. But the reason why is because it's got to kind of digest the recent move and create some value in here. You can see it, VPOC shifted up from this point here up, and that's kind of what it's doing. It's back and forth, but look at the expanding nature. It wiggled a little higher, a little lower, and a little bit up and down, and a little bit up and down, and a little bit up and down. It's increasing in volatility. Today's range is huge compared to what had been seen here over the last few weeks. I think this one could still continue to expand a little bit more. But overall, holding above 1460, 1452, I think you'll see a great LVN get left behind here. That could provide another great buy opportunity. So this one is just a case in point sometimes when you have that imbalance phase. Sometimes it goes up too far too fast. It has to retrade that area. And that's kind of case in point for this one right now. Here's YM, speaking of things that have gone vertical. Incredible expansion out of this one. This one has 23 348 as the FOMC key level. And so far, it's just been pushing higher at just an incredible pace. I haven't seen anything like this. It's incredible. But again, look at the imbalance phase that got left behind here. And right now, you're starting to see a little bit of an HBN pop up because we've gone sideways here for about 5 or 8 days. So we're usually not going to see this thing get left behind. As a matter of fact, something we talked about in our room is how fast we went from 22,000 to 23,000. I mean, we did it in a matter of a few weeks. Like, we went 1,000 points in no time flat and then some. Really went about 1,500 points. Incredible pace, but you just can't keep that up. At some point, you got to rest. You got to build some energy here for the next move. This thing is still very, very vertical. You can see these pivot-based EMAs coming up and providing what could become support, and that gets you somewhere into about 2,350. Again, very similar to what we're seeing in a lot of these charts, is a rejection above the previous month's high, and that could be an early signal that we're at least going to come take out those lows, and then you might see this thing come back up, and you might see some more development here as we head into the rest of the month. So very, very great trading action overall with regards to this trend. Super powerful breakout move. And again, we may look to develop some sort of trading range up here. And for those of you that trade options, again, a neutral strategy could be a great way to play this one once we find a pivot low. If this is a pivot high, it may see a big sell-off down to a pivot low, bounce back to the midpoint, and now you've got yourself a key range, and then the market is likely going to stay inside that range for a while. So again, a neutral strategy for options would be a great way to play something like that as well. So great trending market overall. That's incredible strength out of this one. If anyone has any stocks or any requests here, I'll definitely take a look before wrapping up. I did lots of stock scans and really didn't see a lot that I liked overall. I mean, there was lots of different things to look at, but really nothing that was fantastic. Yeah, here. Oh, that's right, Tesla. Thank you for that one. Tesla here, really quickly, look at this right here. If you go into the after hours, one thing that I mentioned was to our group today. It was, hey, what do you think about Tesla? I said Tesla's not a buy until it gets below 303. 303. Because it's a key range level. That's the key range level. And right now it got a low just below it and popped back up a little bit. Rejected off that previous close there and came back. So this thing's getting hit pretty hard here. But the reason I mentioned 303 is because it's that key range low. If you look at the daily chart here, this is the key range I'm talking about. That's 303.13. It's that impulse low. So when price sold off away from this high and took off way down to that low, on this day right here, we had great odds that this was the low. The reason why is because it tried prices below 2-day lows and rejected, and then closed right back at 2-day highs. Right there, we knew that that was likely a pivot low after this impulse sell-off. So we had to buy back to 345 because that's a midpoint. We got it. And then we had earnings that came out here. It took a gap up and kind of broke down a little bit. So we kind of stepped away until about here. And that's where we said, hey, now it's testing the key range high. Looks like rejection. Again, 345 is your target. It's almost like a D-shaped profile, right? If you're out here at rejection, you bring it back to the mid. Down here at rejection, you bring it back to value. Same concept here. So 345 has been a great target for us when we get to an edge. So I mentioned today that the best odds for a buy will be between 290 and 303. So if price drops into this zone it could be an opportunity to fade it back to 345. So that's what we talked about here before, and we talked about it this morning in the trading room. You can see today in after hours we got just below 303 and then bounced right back to 320 very quickly. But I don't think we're done down here just yet. I think we might see more trading down here. As a matter of fact, we could even see, if it drops down below 303, we could even see a little bit of development here before some sort of bounce occurs. So I don't think it's quite done just yet. But this is one that we talked about in the room, and we talk about quite often as being a cult stock. It's just one that people just buy. They want to buy. They don't care what's going on. They don't care about the fact that they're losing money. But at the same time, at some point, that type of strategy does break down. And so this one has been up, up, up. There's been some great moments in here where we've had some fantastic buy opportunities. This was one where we said, hey, 290 leads us to 390. You can get a 100-point home run, I said at the time. And it went to 387. And then it came back, hit this zone here, and gave us a great key range. So right now what it's doing is building great energy. It's building up some great energy in here. And again, if we were to get outside this range, it could provide a high probability bounce back toward 345. Now, I also mentioned 290 is a market structure key level. So if this thing were to break below 290 and it can't reestablish itself back above that zone, then based on market structure, theoretically, it can come all the way back to the opposite end of the range, which is 180. You also have value here at 209. I'm not saying that's going to happen right now, but that's something I'll be looking for. If it breaks below 290 and it's struggling, then yeah, we could get all the way back to this zone here. And look at that right there. They lost $2.92 a share. I mean, it's more than double than what it's been doing. And now they have competition from all over the place. Everybody's getting into the same deal as they are, electric vehicles, autonomous vehicles. So very interesting chart. I think this is a zone to keep an eye on right here between 290, 303. This is a zone where you could begin to see a trap and a great bounce back toward 345. And if that's a high quality target with a shot to even come right back up toward 387. So that's a great spot, high quality target. And then that's, if you hit this target, you could even see more to the top. Because right now we're in a spot where this thing is kind of building energy. It's trading in a range. It's building out in this zone. And at some point, it's going to release that energy. So whenever we do see expansion from this range, we have this key range and we have these key range targets as well. That's your 50% expansion to the downside. That's your 100% expansion to the downside. Now, what if we break to the upside, right? Well, if we break to the upside, here are your upside targets. 429 and 470.85, because we're taking this range and we're projecting it 100% up here and 50% up there. So at some point, perhaps if we see some significant rejection that we want to see here, perhaps 6 months down the road, you could actually be up here at 470 whenever it's ready to break through and rally. So this is a very interesting stock. Again, kind of defies logic. Lots of debate about it. For us in the room, it's all about the key levels. It's all about the price. That's it. Your price and volume and what's happening against it. We're looking at market structure, and right here provides a great buy opportunity. But failure to hold 290, I think stuff starts hitting the fan at that point. Here's DPZ, and then I'll jump on Bitcoin as well. We talk about Bitcoin more and more in the room now, and so I'll give some thoughts on that. Here is DPZ. This is Domino's. I know Papa John's is getting beat today. PZZA. They're blaming NFL and the flag and anthem stuff, protests and all that. So You know, who knows if the entire pizza industry group is getting hit or what. But right now, this one's had quite a move down. Uh, yeah, yeah, I know, right? I guess I don't know. I don't know what's going, but usually we make our own in the wood fire grill in the backyard. And now that it's cooled down, it's gonna be perfect. So right here, I think this is we're getting down to a great spot in the chart where, again, if you're looking to buy, if larger institutions or groups or funds are looking to buy, this would be the spot. 175s. You have a CLVN right here at about 172, right? So that's like the true support zone right now. We're coming right into it. So let me go ahead and mark that right now. So if you right click here, we'll add a drawing. We'll go about 172.50. I'm going to call this one a CLVN, Composite Low Volume Node. Make it 172.50, click OK, boom, there we are. So now you can see this is a CLVN. Again, that's where you want to engage if you're looking to buy. You want to see participation, you want to see rejection, you want to see price recoil off that level. As it had here, a little shy there. Before it was resistance until it broke through and became support. So that's a significant level. And I always say, if you want to go long after something's getting its butt handed to it, it's usually upon breaking these lows. Break those lows, and that's where you could see some sort of turnaround. So 172.5, it's a big time level there. I'd be watching that level for signs of a bounce. Now here, you can see here, we had this short back here in the room. And the reason why is because we had a great impulse sell-off that gave us a key range. And then price came up here and rejected prices above this high. And when that happens, the idea is you come back to the midpoint with a shot to come back across the range, right? And so you can see right there a great rejection tail. And then right there, that's the midpoint. That's the ideal entry in our PivotBoss trading room. That's the ideal entry zone. And then from there, that's the ideal target with a shot to go here. Look how price broke through and hit the 100% target. Again, based off of that impulse range right here. Then comes back and hits the bottom of the range. Then drops below this key range here, pops back above it, makes it support, walks its way. It's just incredible, these key ranges, when you pick the right one. So I could take this one off right now and we can mark another one if we wanted to. For example, if we were to mark a new one, we could mark this low to that high and bring it back to a mid. And now we have that key range. Or perhaps we can mark it from this low to that point here, and now we have that key range. And that's probably the better one to watch. I'm going to do that right now so you see what that looks like. So right here on this high, let's take a look here. That is, let me zoom in a little better. That high right there is 216.91. So if I come in here and right click, this is your fib extension tool. And we added different defaults to it so that it gives us the extensions we want to see. The low here is 181.09. And then from there, the midpoint is 199.02. That's right here. Basically right where that pivot range is. That's our key range right now. It's an impulse sell-off back to the mid. So that basically it went up, found a high, and then sold off hard until it found a low, and then it came back to the midpoint. That gives us a key range. So if you're watching DPZ here, this is the key range I'd watch. And basically, whenever price gets back above 181s, right, that's go zone back toward 198. So 172.5 is going to be a great spot to watch for rejection. If you see rejection there, climbing back above 181s returns price back toward 199 at the very least. So those are a few thoughts on DPZ. Now Bitcoin, let's go talk a little bit about Bitcoin and I'll close on that. I'll go to Coinbase.com. Coinbase.com is a great spot to buy and sell Bitcoin. If you open up a GDAX account right here, buying and selling Bitcoin is free. And it looks here with the limit orders above, limit orders below. You can see price here. This is a great way to check it out. Great little platform here. And so this is where you'd like to engage. But this is great news from CME Group that they are going to create Bitcoin futures, which is fantastic. I can't wait to check that out. And I'm surprised at how quickly they're going to implement rather these futures. I mean, by the end of the year in Q4. So that's incredible how fast they're going to get these up and running. Now, if you go back to Coinbase here, there's a spot here called charts. And this is the raw Bitcoin price. You also have Ethereum and Litecoin. And you can just see this price is just sick. It's sick. I mean, it was at 650 here and it hit 6,500 today. Actually, its last price is 65.88.48. So that's incredible. The last time I had a buy on this was between 3,000 and 32.50 was the buy. It basically hit 32.50. And the target was 5 to 6 grand, and it hit it right away. I mean, it did it fast, and it's all based on market structure again. So, again, there's lots of lots of argument whether this is a fraud, whether it's good, whether it's a bubble. I mean, everyone's talking about this. Everyone has a strong opinion. For me, I believe it has much more upside before a bubble pops. And whenever a bubble does pop, it doesn't, it's neither here nor there. Manage your risk and trade accordingly. With this one, I believe that it's just minting millionaires left and right. It's incredible. I think somebody got in back here with 10 grand and they made something like, I don't even remember now, 3 or 5 million in 6 months with like a 10 grand investment. I mean, it's something sick. So this recent pivot high is about 4,500. That might be the next pullback zone that provides a bounce, but we might not be done going up on this current leg. So again, I'm just using market structure, right? The reason why I think it has much more upside is almost like you see with some of these others. It's kind of a cult thing. The people that love it are just buying it, and they want to continue to buy it. Others see it as a way that's just breaking open, the whole way we buy and sell, that type of thing. And so it's incredible how much it's going up. I think also with this one, whenever you have something that's just making money and it's just going up, everybody else wants a piece of it as well. But there's no way for people to get in with their 401ks or get in with their IRAs. There's no way for institutions to get in as well. And so you have to create products. You have to create products so they can get in. So that's going to create additional demand. And that's where you start to see the ETFs come in. That's where you're going to start to see the futures. That's where you're going to start to see all these different products. And that type of demand leads to more upside price discovery. So I think this thing still has more upside. I really hesitated to provide any buy and sells to the group for a while as we were watching it. But some of my closer friends have asked, hey, where's the great spot to buy here and there? So I provided, 1750 as a buy back in this zone here, and with a 3,000 target, it got there. The last time was a 3,000 to 3,200 buy with a 5 to 6 grand target. It got there. So it's doing fantastic. I think we still have much more upside. We could be at 10K, by first quarter of next year. But the only thing is, because it is highly speculative, you have to be careful. You can't. This isn't something where you're throwing all your cash in there. This is a percentage of a portfolio, and based off of how a lot of folks, engage portfolio management, engage in Bitcoin, which is not correlated to anything else, actually smooths out your risk profile. So if you add, say 2% of your account, or to a Bitcoin, it actually helps to smooth out the risk because it is anti-correlated and it's just going up. It's incredible. Hey there, everyone. Welcome. So this one right here is still going up. I still think it has at least up toward 10,000, perhaps even more. At some point, maybe, it is quite volatile, so you have to be very, very careful with that. But overall, it's been fantastic. I mean, look at this right here, plus 5,800 since last year, plus 800. That's on a 1-year look. You can look at a monthly, weekly, daily, hourly look right here as well, just by clicking that chart. Here's a 1-day look. Right, here's a weekly look. It's just been strong. So I think we have more upside. I think maybe perhaps 4,500 might be the next spot to pull back and buy in if this market structure continues. But you just have to know that this is a highly speculative instrument, very volatile, and so you have to do it with you have to be very disciplined about your approach. Manage your risk at all times. This is new. You got central banks going to be fighting this fight. Governments are doing this. I mean, it's incredible, but it's changing the game. And this is the biggest underlying point I want to make about Bitcoin is that it's the underlying framework that blockchain is very, very important. It's brilliant in the way that it was coded by a brilliant coder. And it's just incredible, and I read research that suggests that it would cost about $1 billion just to create one fraudulent link in that blockchain. So it's almost foolproof with the way that it's done. So I don't want to ever say anything's foolproof, especially when we're talking about tech. But it's incredible. So the underlying technology is incredible, and I think just that alone has some significant value and can change the game. So I am all about Bitcoin right now. I know there's huge, argument back and forth, lots of dialogue with folks on wild sides of each other on whether it's good or not. But I think it's something that you should definitely pay attention to, and at least a portion of your funds can be in there. Yeah, 5% of your funds invested, absolutely, and I think that's about right. Yeah, 2 to 5% is a great amount, and thanks for providing that. Absolutely. So those are my thoughts on Bitcoin. It's not for novices. I do think you have to know how to engage as a trader. You have to know how to mind your risk, how to enter, how to take your money out, and those types of things. But this one has been fantastic so far. And our 2 buy points have been huge winners. So not bad so far. I close my eyes to portfolio management. That's funny. Oh, Iranian government's preparing for Bitcoin use inside the country. Yeah, that should be interesting indeed. Absolutely. That's exactly the point, Brian. That's exactly the point. Ideally, take out what you put in and let it run. That's the point we've been making in the trading room. If you put 10K in, you've doubled it from the last time. Take that 10K out and leave that 10K in, whatever you made, and just see what happens. That's my preferred approach right now to this one, because who knows, right? What will happen over time. But this thing has been doubling money on these pullbacks. You put in 10K, put in 50, whatever that portion is that you have, and take it out once you make it. Take out what you put in and just let the rest run and see what happens. Because a year from now, what's it going to be at? Who knows? So that's a great way to go. Absolutely. Ideally, take out what you put in and let it run. Great flow there. We did cover ES a little bit earlier, and I'm actually going to be processing the video here and putting it up. So you'll be able to see that. But basically the idea is we could be looking at a short-term swing pullback, but it's still a buying opportunity. And after the recent trend up move, it's likely going to establish a range at these highs. That's kind of what it's looking towards. So again, I'll post this here, and you'll be able to jump back on and see ES. Tulip Mania, absolutely. I've been reading more about that since you mentioned it. Thanks for mentioning that before. The chart for tulips. right? Back in what, 1600 is something like this, and then that. That's incredible. That's the chart for tulips, like in the 1600s. It was just incredible. So, who knows? I think the technology is sick. I think it really is incredible, and I think that has merit, and I think that has value. So I think it still goes up before we see something like that. But again, if you mind your risk, I think it's a great opportunity. All right, everyone. Well, I'm going to go ahead and call it a session there. Thank you for the awesome discussion. Thanks for providing some topics for discussion. Always great to have you all. I'm going to go ahead and get this recorded and posted so that you'll be able to replay it. And again, as always, thanks so much for being a part of today's session. If you want to go to pivotboss.com and check out some of what we offer, my book, our trading room, even masters, we got a lot of great content here. And again, always good to hang out with you the first of every month. So thanks for hanging out, everyone, and I'll see you all soon. Take care, folks.